Hey guys, it's time for Money Love again. I'm Faye. Thank you for joining us on this episode. I'm starting to really enjoy these chats. This week, we're going to talk about insurance, and we'll do a basic sort of run-in into insurance, and then we'll go deeper into each one in weeks that come in the future. But before we go further, let me do a quick shout out to our partners, Frio. In fact, there's a link in the description of this video. You can take a closer look at Frio. It's a banking experience. It'll give you access to loans. It'll give you access to various sort of formats that will help you manage your money better, and various products that helps you manage your money better. The good thing is Frio gives us the ability to bring you content like this, which I'm really happy about. So we're really glad to partner with the team at Frio to be able to do this week on week. So let me get through some of the questions. Itambara asked us a question. This is actually really sweet. The person adding GIFs to your video has the best job. Can I be that person? Well, the truth is the person who does that is Shubhankar. That is Shubhankar. He does most of the graphic work on all of our videos, and he also picks the GIFs for these videos as well. So shout out to Shubhankar. So Tamra, if you want the job, you're gonna have to steal it from Shubhankar, and right now he's doing a really good job. So that's a lot of ask. Okay. Shalini says, thank you for the video. Can you perhaps cover cryptocurrency in one of your segments and how safe it is to invest in? You've got it, Shalini. We've got cryptocurrency coming up in the next couple of weeks. So, stay on track with Money Love, and we'll bring you a special episode on cryptocurrency. Okay. Today, we're going to talk about insurance. It is known to be one of the more boring forms of personal finance. People find it tremendously boring and normally don't really like to talk about it. I like to talk about it, and I'll tell you why. Because when I started my career with CNBC TV18, the TV channel, the business channel, I was an insurance reporter. Yes, there is such a thing as an insurance reporter. So for 2 whole years, all I did was cover insurance day in and day out. So I found more than 300 things to say about insurance in the course of 1 year. And then the reason why I got that beat, because it was the most boring beat and nobody wanted it. So I was the junior most person in the team, and that's why I got insurance. But I really loved insurance. That should really tell you something about me. It's not that boring. It's quite interesting, and I'm going to try and make it a little interesting for you so you can understand it better as well. So putting it very simply, what insurance does is that it prepares you for a financial loss of any kind. For the possibility that something might happen that will cost you a lot of money, you buy an insurance policy, they pay off that financial loss. Fundamentally, that is how insurance works. And if you run a business, there's a lot of things you can do with insurance, but we're going to stay with the individual sort of personal finance angle to insurance, right? So you'll remember when we started off right at the beginning, we're talking about how you should start investing. I did say you should have an emergency fund and you should have an insurance policy before you do any other investment. Now, the reason why you need to have, in my mind, at least 2 insurance policies, your health insurance and your life insurance, is, let's assume you start investing, right? And you have someone falls sick in the house and you have to pull the money out of your mutual fund, you have to pull the money out of your fixed deposit and use it for hospital bills. Effectively, you've defeated your purpose of investment. But if you have a health insurance policy, then you don't have to break any of your investments to make that payment. The same thing with a life insurance. Now, let me start off by telling you what a life insurance policy is. Basically, if you die, your family gets a certain amount of money. It sounds morbid and it sounds harsh, and a lot of people don't like talking about it, especially very young people in your 20s, and I think that's fine. If you happen to be in your 20s and you don't like to talk about insurance, I think that's okay, because my thumb rule for insurance is that you actually need life insurance only when someone is dependent on your salary or the income that you bring into the house. Yes, everybody is going to be heartbroken if something happens to you, but the worst part about it is the money that you're earning that is currently paying the fees, paying the EMIs, looking after the loans, looking after your family. What happens to all of that if something happens to you? That is where life insurance actually comes in. So my thumb rule is always you should buy life insurance when you have someone dependent on your salary, especially young people who are supporting their parents, or if you're getting married, and especially if you have children, you must buy life insurance policies. There's the other question then of how much insurance should I have? The thumb rule again here, the textbook rule is at least 10 times your annual income. So whatever is your annual salary, 10x that amount, and it will seem like a lot, but it's actually not a lot. And there are insurance policies that are not that expensive, and we'll go through the cost as well. So the idea is to get at least 10 times your annual income, and if possible, as high as you can possibly go on life insurance. That is my thumb rule. Now you'll say, oh my God, that seems like a lot of money, because depending on how much salary you make, it could run into crores and crores of rupees, but it's actually not that much. So on a average, most of the insurance policies in India will give you a term insurance policy of 1 crore rupees for a reasonably healthy 30-year-old at about 500 rupees a month. So that's 6,000 rupees at the end of the year. That's actually not a lot of money if you consider how much we spend on, say, fancy cups of coffee or other things that young people like to spend on. So about 500 rupees a month is what you will have to pay to get an insurance, a life insurance policy of 1 crore rupees. So in case something happens to you, that's the money that will reach your loved ones, so that at least they don't have to worry about the financial loss, right? So there are, of course, different types of life insurance policies. Now, most of us would be familiar with something called the LIC policy, mostly because there are many people whose parents would have bought them LIC policies when they were very young, which would have just matured, would have given you like 3 lakh rupees, and you're like, what am I supposed to do with this money? It's not a lot. So there are 2 types of insurance policies. One is the term insurance, which is what I just told you about. A term insurance policy is purely transactional. You take the policy for a certain term, for the next 20 years or the next 30 years. You pay the premium every year. If something happens to you during the course of that policy, your family gets the amount that is agreed. If nothing happens to you and you survive the course of that policy, then you get nothing back, because effectively you've only paid for the risk and the service. You've not invested any money there. A lot of people see that as a disadvantage. I don't. I think it's a good thing. You should take the policy. If you do take a term insurance policy, take it for as long as you can, and it should effectively finish when you retire. Because once you retire, nobody's dependent on your income anymore, and so you don't need the life insurance policy anymore. That's effectively how that should work. Or you take the policy for the term until your child turns 25, when you feel you have to support them education-wise and all of the other things. And then if it expires after that age, then nobody's dependent on your salary, and then everybody is okay. So effectively, that's how a term insurance policy works. Then there are the insurance policies that are linked with investment, which is basically, it's like idli vada sambar, right? You can choose to only have the vada, which is your term insurance policy, or you can choose to take a combo meal, where basically they give you the term insurance and they also give you an investment component in it. So of the premium that you pay, a portion of it pays for the term insurance and the rest gets invested. And at the end of the term, if God willing nothing happens to you, you get your investment amount back. Now, that's another way of looking at it as well. And since normally people take insurance policies for the next 20 years, it's a nice long-term investment. People are less likely to stop payment, to break their insurance policies. That money stays in longer. Those are the advantages of using an insurance investment. The disadvantages are that it's not a very efficient investment, because also you are not very efficient when you're managing it. So even within that, and now it's getting slightly complicated. Remember, now we'll have to do like a flow chart, right? So out of life insurance policies, there's the very simple term insurance policy. Then you get into your investment linked insurance policies, one of which is like your LIC, which is an endowment policy. You pay for a certain number of years and you get a fixed amount at the end of it. The other one is what is called a unit linked insurance plan, or a ULIP, where basically it is the investment component is linked to the stock market, and you get a stock market-ish return and also a risk. So remember, we talked about a mutual fund. So this combo meal of idli vada sambar is life insurance, term insurance policy plus mutual fund. That's what makes a unit linked insurance plan. And a term insurance policy plus a fixed deposit-ish, PF-ish like scheme makes a endowment policy or a money back policy that pays you a certain fixed money back at the end of a certain amount. So that's how that works. And if you have more questions about life insurance in specific, we can get into that. If you write some of the questions in our comment section, we'll do specific videos breaking down each of these things depending on what your questions are. Personally, if you ask me, I would use the pure term policy just the vada to go, and I would use mutual funds instead, because I find it easier to separate the two and not combine the two. It makes the costs of the whole thing and the charges a little more difficult to understand. The endowment plans, I feel, don't beat inflation, which is why you will be investing in it for years and years and years, and at the end the money will come back, and by that time the value of that money has come down. So when your parents started a policy when you were 2 years old, 3 lakh rupees was big money. Now you're 20 years old and 3 lakh rupees seems like nothing, right? It barely covers anything at all, because the value of the money has changed. And for a very, very long-term investment, remember we said that it's better to stay in equity because it beats inflation and it keeps up with the value for money. And we can spend more time talking about that, but we also have to talk about health insurance. Now, health insurance in my mind is a non-negotiable. You cannot go without health insurance, not for a single day. So there are again different types of health insurance policies. There is the individual health insurance policy, which you buy only for one person. There's the family floater, which you buy for the whole family together. There is the group insurance policy. Now, this is a tricky one. Group insurance is what your company gives you, because they basically insure the whole group, and the risk is divided across the whole group, so it becomes a lot cheaper. And there is that group insurance policy. We're going to talk about pros and cons of each of them. Individual health insurance policy covers only you. That is done based on it's priced based on your health. They will give you maybe give you a medical test as well, and that's how they price it. I think it's a very good way to do it. If you are single, please get a individual health insurance policy. Get it for at least 10 lakh rupees. Imagine, and you might say that, listen, I'm young, I'm reasonably healthy, nothing's going to happen to me. But if you have a couple of drinks and you take a tumble down a set of stairs and you hurt your foot, you have to go to hospital, right? That's also one of the side effects of being very young. So you need to have health insurance that covers any sort of hospitalization. So if if you hurt yourself slipping in the bathroom and you need to put a cast on, you'll have to go to a hospital. So make sure you have health insurance policy, and make sure, this is important guys, make sure you have a health insurance policy over and above what you're getting from your office. I'll tell you why. The office health insurance policy is normally picked by someone very clerical, whose aim is to keep the cost low. So they don't spend that much time looking at, does it cover everything, what sum insured is it giving, will they pay on time and things like that. They're just like, let's keep the cost low, let's just buy this because we have to. Also, what happens is sometimes if you switch jobs, you'll have a gap in between two jobs where you won't have a policy. So, and the coverage tends to be a little low. It is 1 lakh, 2 lakhs, that sort of thing, which from going to a hospital is not enough. So it does make sense to buy a health insurance policy, any age that you are at, and make sure that that health insurance policy is over and above the office policy that you have. Now, if you live with your family, it might make sense to use a family floater plan, which basically gives an insurance policy, just like the company buys for all employees, this is for all family members. The only thing I would leave here is that if you have a senior citizen who lives with you, buy the senior citizen a separate policy and buy the non-seniors one policy altogether, because what happens is the one senior citizen will drive up the rate for everybody else because of their age, and invariably they'll have a couple of existing conditions to begin with. There are senior citizen specific policies available in the market which are more expensive but far better suited, because they cover a lot of the existing issues that our seniors tend to have. It is an absolute must to get an insurance policy for your parents who are senior citizens, because they tend to need the hospitalization more, and it might seem expensive when you're buying it, but it will be worth it because it has specific advantages that are suited for senior citizens. So these are the types of health insurance policies. There is the individual, the family, the group that tends to be used by companies, and of course the senior citizen. Now, in between life insurance and health insurance, there's something called critical illness. Just stay with me, don't get bored. There's something called critical illness insurance. So health insurance will cover a hospitalization. Life insurance covers a death. But in between the two, if you are diagnosed with a critical illness, or assume that I'm diagnosed with a critical illness that requires long hospital stays or something like dialysis or long-term treatment, your health insurance policy will run out, and then you will run out of money. Also, you won't be working at that time, so your income will stop and you're spending more money, right? So we hear of a lot of people who go overseas for treatment when diagnosed with life-threatening diseases, because treatment in some other parts of the world tends to be better. The question I ask myself is, if I need that kind of treatment, which means you can't work, you're stopping your work, you're going overseas, you're living overseas, one family member has to come with you to look after you, would you be able to afford that? Now, the way to answer yes is to buy yourself a critical illness policy. It has a certain number of illnesses listed, and as soon as you get your diagnosis, it just pays you a lump sum of money. It's not a sort of reimbursement system, but it gives you a certain amount of money, like a life insurance policy, that you use then for treatment and to substitute the income that you have lost. So a critical illness policy is a really intelligent thing to do, and I highly recommend it as well. So remember, we talked about life insurance, health insurance, critical illness insurance. These are all insurance policies that are personal to you. Then there are the asset insurance policies. You know this, everybody gets car and bike insurance mostly because it's compulsory, but you can also insure your house, you can insure all of the things in your house from fire and flood and natural calamities and burglaries and robberies and things like that. That's an intelligent thing to do as well. It's something that you must consider. Most of the asset insurance policies are year long, so you just have to renew it every year, much like your car and your bike insurance, and they're not as expensive as you might think, and it's something to consider as well. Couple of things to keep in mind when you are doing any insurance policy. First rule, all insurance policies are contracts based on good faith, which means the insurance company says, I am going to assume that everything you say on your form is the truth. So if the insurance company figures out later that you lied in some part of your form, it can choose not to pay you because you are in violation of the contract. This is the most important rule, guys. So when you're doing health insurance and it says, do you smoke? And if you say, no, we actually do happen to smoke, what you're doing effectively is throwing your money away. There's nothing wrong with just ticking the truth every single time. So if you happen to have a drink a week, say so on your form. Do not hide anything on the insurance policy form, because it is valid for the insurance company then to refuse to pay your claim if you have lied on your form. Most important thing. Second thing, look at something called a claims ratio, especially in life insurance. It's a public number, it's available on the internet. When you're choosing between companies, choose a company with a high claims ratio, which means this out of 100 claims that they've received, they've paid back 90, 95, 96, 98% of the claims. That's an important sort of statistic to look at. A lot of people believe that, the one government life insurance policy company we have in this country, which is LIC, is more reliable. It's like everything else we consider. It is, the service tends to be a little PSU, but it's as good as any other insurance company, because like I keep telling you, these financial products are really heavily regulated. So the odds of someone sort of wrapping up the business and saying we can't pay you your policy seems unlikely. But sometimes they do investigate policies a lot, or especially in health insurance, there seems to be a lot of paperwork. So you can do some asking around and see which insurance company pays really quickly, reaches out to you, makes it less painful to actually get your claims, and choose that way. A lot of insurance policies, especially on the health and the critical illness side, offer you a free medical test along with the policy when you buy it. I think it's a good thing. I think that, diagnostic medical tests are always a good thing. You should take them as often as you can. So do take that as well. And once you get an insurance policy, keep an eye on it. Review it regularly. You may have, and I hope you do, get many raises, and your salary might increase. At that point, consider whether you want to increase your insurance cover as well, because now your salary is different, your lifestyle is different. So you can either top up the policy you already have or get another one to complement it. That might be a thing to do as well, and we can talk more about that in our future episodes. So if you have questions about anything to do with insurance, I personally love insurance, so leave me that question. It'll be my pleasure to answer it for you. Shout out again to Frio before we leave you for the day. Frio is our partner, a digital banking experience that you can take a look at. It helps you manage your money better. Thank you so much for watching. You have a good day. Remember, if you love your money, it will love you back.